Welcome to another episode of the Infinite Returns podcast. Today I have really special guest, Connor Kinney. He's amazing. He's 22 years old. He has 37 units using seller financing, like super crusher guy, hustler guy. Um, and him and me actually have a lot of similarities, like with our units and stuff like that. It's actually kind of crazy. It's actually kind of crazy. But yeah, Connor, introduce yourself. Like, tell them kind of who you are and everything. I want to know, like, how did you get started? When did you get started? I know you started when you were 19. Is that right? Like, you got
Yeah.
started into the game. Yeah, tell them a little bit about yourself.
Yeah, my name's Connor Kinney. I'm the founder and CEO of my company, Kinney Property Group. And so as I said, we've got about 37 units, buying a couple more here soon. And then we also do a lot of fix and flipping as well for kind of our active business as well. And I bought my first property, yeah, when I was 19 years old. I when I was 18, I was going to college, and I remember sitting in the classroom going, I don't know what the heck I'm doing here. Like, this is terrible. And I always kind of had that itch to start my own business. And ultimately, I started working for another real estate company while I was still going to school. And I did really well there. And so I ended up dropping out of college and going full time into real estate shortly after I started, as I said, Kinney Property Group, my own company. And now it's me. I've got a couple part-time employees under me, and then that's pretty much it. But yeah, I bought my first deal, which was a duplex when I was 19 years old with seller financing. And that deal was super fun because I was rejected by banks for a long time. And I had to figure out a way to say, hey, I need to make this thing happen. And so that's that's what I did. I learned about seller financing, and ultimately we got the deal done. It opened my eyes to say, wow, I could do this on a bigger scale. And as Lucas just talked about, I just bought a big 29 unit deal with seller financing as well.
That's amazing. So 19, you get this duplex. So you already knew, you understood creative financing out the gate, or like how did you learn about creative financing? Like what was that process look like for you?
Yeah, I actually, as I said, I was getting rejected by banks and people telling me, well, you're too young to buy real estate. You don't have the experience, the track record. And so I really started reading some books, and one of which was called How to Invest in Real Estate with Low and No Money Down. And then another one, as you know, Rich Dad Poor Dad kind of was like, hey, you got to buy some assets. So I just started YouTubing and Googling, hey, how do you buy properties with little to no money down? And some videos talked about seller financing. And I never heard of seller financing. I don't have any family or friends in real estate, so I didn't know what the heck that was. But once I knew what it was, I thought, well, all I have to do then is cold call or find some off market deal that they will seller finance me, and I'm in the green. So if I can do that, so shortly after, that's how I found the duplex.
That's awesome. That's awesome. So you're tell me a little bit about your terms too. Like let's talk about this recent one because I've never seen terms like this. Like these are the best seller finance terms I've ever seen.
Yeah.
We're talking a little bit like 3% down, something like that.
Yeah,
Crazy.
it's
Like
a little less. Yeah.
my God. And then the rates like that you got. I mean, dude, so what makes a great seller finance deal? Because I know you have to target specific type of person. Like it has to be someone that, owns it outright, like no bank debt pretty much, and like they're retiring or they're older or something like that. So tell me about that type of person. You went out and sought out that type of person, right? Because that's what I did too. So
Yeah.
yeah, tell me a little bit how you looked at that.
Yeah, and Lucas, you know this game. The game is following up. So again, you're a beast at that, and so that's what I've learned to do is, hey, you gotta follow up. It's all about following up. So I reached out to these sellers, probably six. This is actually one of my shorter time frame
Hmm.
deals wise, which is interesting. But they had one duplex that I drove by that was by another property I own. And it intrigued me because it's a neighborhood of single family houses, and there was one duplex and it needed a new roof. And
Hmm.
so I drove by and I was like, man, this thing needs a new roof. Maybe I should just call and see if they want to sell. So I called him and ended up finding out that he was interested in selling. But I also, every time I talked to a seller, I will go on the county appraisal district, whatever software I'm using, and look to see if they own any other properties. Because I do a lot of small portfolio buying. I bought like a 6 unit package, 10 unit, whatever it may be. And I always get a better deal if I can buy multiple properties from the same seller. So I'm going, hey, do they own anything else that I could, you know, make this thing a package deal and buy it? So they did. They own 10 other properties. So I bought 11 property portfolios, 29 units. And after going back and forth for a while, I learned that they didn't have any debt on the deal. They were getting older. The husband was kind of out of the business. The wife managed it, and she was just ready to be done with it. So we ended up meeting for coffee. And it's really funny, Lucas, because typically when you know, in person, face to face is huge for me. Every deal I do, I try to meet them
Oh
in
yeah.
person. So we met in person at this coffee shop, and I get a little presentation going, and ultimately I ended up just turning off my computer, and we're just talking through the deal, and they're getting to know me a little bit, and I guess they liked me because I showed them my terms, and they're like, yeah, we like it. We have this one change, and that's it. And so that was the that was the kind of blessing on the deal. Um, and so ultimately, yeah, we got it under contract, and then we did some inspections, did all the walkthroughs. And so the terms on that deal, 29 units, it was a $4 million purchase price. I put $100,000 down, which is about 2.5% down. And then it's a 15-year balloon payment. So I've got 15-year term on the loan, and it's for the first. I do this a lot. I call it like a step up interest
Yeah.
rate. Typically, when you buy this property, is surprisingly it's actually stabilized and they're all in decent shape. But typically, these properties need a ton of work, and so I typically do a lower interest rate at the start and then gradually work my way up to like an interest rate cap. Because let's say the seller wants 5 or 6% interest, but you're going, dude, I need to be at 3% or 3.5% for the first year or two so I can have a lower payment to knock out some of these renovations. So I did what's called a step up. So it's 3.25% interest only for the first 3 years. Then it goes to 4.25% interest only years 4 through 7. Then years 8 through 15, it is 5.25% interest only for the remaining term. So the debt, that this is why I like the seller financing, is the debt structure is incredible. So you can't beat it. Nonetheless, I have no partners on the deal, so I own it 100% myself.
No.
And obviously that's great, but it was just cool because I mean I will have no money into the deal by the end of the year. I've another crazy structure is I negotiated 2 months of no mortgage payments.
Yeah.
So
That's
I have not paid, as we speak, I have not paid a mortgage payment. My payment starts to them
wow.
March 1st.
Oh
So
my.
so I've brought in almost, I mean, 65
Yeah.
grand in rents. Now obviously I have my taxes, insurance. I mean, you know the drill, but I've gotten a lot of my capital back already. So by the end of the year, I'll have all my money back and I'll have no money into the deal and I'll own it 100%.
Yeah, see that's something you can only do with seller finance. And that's what's so special about seller finance. I mean, 3.25% interest only and a 15-year balloon. I mean, it's like that's crazy.
Yeah.
It's amazing. That's
And it's
amazing.
all it's all about building the relationship too. It's a lot of it's a lot, I show them my track record of other deals. My previous sellers of seller financing have been very gracious and said, hey, if you need any referrals from us, please let me know, because they really like me, and they know that I do what I'm gonna say, and so, or I do what I say. And so that's really helped as well, as saying, hey, I have this track record of other sellers I've done seller financing deals with. You
Mm.
know, I've never missed a payment. They enjoy doing the deal. So if you want to reach out to them, feel free. And I think that makes the seller feel a little bit better that I've done it previously as well. And then just being really upfront with them and saying, hey, here's what works for me. Here's what I can do. Here's my track record. I think they really like that. It's all about the trust. You got to get the trust.
100%. Now, you said something earlier about like your team members and stuff, and this is what I want to ask you too, because I'm just curious for myself. So about like continuing to expand and grow, right? And having team members in place, like what team members do you have in place, and how do you think about like moving forward with like getting a strong management team, like a handyman. I don't know if you have someone that's like comes out. That's what I'm trying to figure out now. It's like, okay, I gotta get some sort of team in place. Because still right now, no, it's been just me, like literally
Yeah.
no, and that sucks. Like it's I don't like it. And so I'm trying to see what should I do. Like, do I get a VA for to help me on the act side? But it's also this big management piece that I now I'm dealing with a lot. I'm just like a lot dealing with management and now it's less so on the acquisition. So I'm trying to get things in place so I can continue doing it. Like how do you think about it? Like what do you do?
Yeah, so you said it right. I mean, that's what I feel or felt in the last couple months is, hey, I'm so into the management, the acquisition stuff is hard right now, and that's where I make the money is on the acquisition
Right.
side of things, and you know that. So what I've done, I have a maintenance person that's part time. So um, anytime I get a maintenance request or something happens, he's on top of it, which is great. I also have a part time leasing lady who
Mm,
helps me out as well. And it's not, you know, as I said, she's part time ish. And so I don't need her a ton. We're 100% occupied right now. So it's not, that's nice, but it has taken a lot off my plate in terms of the leasing and
right.
management side of things. Because I do manage everything myself and I would like to stay that way. I think it's good to manage your own properties, but
Mm-hmm.
obviously you need to determine, hey, you know, where's my time
Yeah.
best spent? And my time best spent is doing the acquisitions. So
Right.
that's why I had her kind of come along. And so once we get some more units going, I think we can easily ramp her up to be full time and then a full time maintenance
Right.
person as well.
Right. See that's where I'm at too. It's like it's not enough yet to like get people in full time. So you have to like basically do everything and then scale more. But it's like
Yeah.
I feel like it's always kind of like oh just I need a little bit more and then but I guess it is true. It does become true at a certain point. I mean, come on. I mean, it's like once there's enough, you can get hire people. Like
Yeah.
who knows?
No, and several friends of mine own couple hundred unit buildings, and they kind of say it's for every 100 units you need
Yeah.
one leasing person, one maintenance person. So that's what I see is, hey, if I can get to 100 units, then I can have, and maybe that's a little bit more than maybe it's a maintenance person and a part-time maintenance person,
Yeah.
but getting there, because I truly you and I are kind of in this middle ground here where we're bigger than the average person's portfolio, but we're not so big that we can just
Right.
fully have a team. And so I mean, every person I talk to is like, yeah, you're kind of in this gray area here because you need to buy some more units to then be able to hire some of those people. So that's the reality of growing. It is irritating because, we're having to do a lot off our plate right now, but I think it's good. And, I know you and I will get to 100 units here pretty soon. So it'll come soon enough.
Right. And that's what I was going to ask you next is like, how do you see about scaling? Like, what type of units are you targeting? Because now I'm looking at like, okay, I could, and I already have a pipeline built up of like people that's like, here, there's this 22 unit here. This guy could do seller financing. That's great. There's things like that. So I'm still doing that, but then now I'm looking at, okay, now I mean what should I do? Like should I take this route? I want to maintain as much ownership as I can. That's what I want to do,
Yep.
like just for me, like but now it just like opens it up and like there's all these different routes to go. Like what do you see yourself doing? Like how do you think about go getting up there, to those units, that count?
Yeah, my plan right now is to continue, all my deals have come from cold calling. So continuing the cold call acquisition strategy,
Mhm.
it is now going to try to do a little bit bigger
Mhm.
apartment deals. So anywhere from like 50 to 100 unit range,
Yeah.
and something where obviously if they want to seller finance, that's great. If they don't, then I'll have to get a good price on it. And then I'm in the same boat you are. I really like to have as much ownership as
Right.
possible, and seller financing is
Right.
that happened for me.
Yeah.
I know that's not. It's going to be hard to buy a big.
With the bigger units, it's like these guys, it's less and less so that these are mom and pop owners and they're
Yeah,
dead, right?
yeah,
So, but there's still great deals to be had, and I know how to find a great deal if I
yeah,
can base this a little. But now there's these other factors where, okay, if I'm going to get a bank note, there's these other factors now, like either that I gotta or something like that, I gotta figure it out, right? So yeah, that's interesting.
yeah. It's just you gotta. I think you gotta play where your pieces are, and with the bank debt it's just difficult because you got to put 25 to 30% down, which is a lot of equity on a several $1 million deal.
Right.
Now, with that being said, I'm not opposed to a structure like I think you have on the 28 unit where you've got one partner.
Yeah.
Like that's very intriguing to me on a
Right.
big deal. It's not so intriguing to me to have 100 or 200 partners. It's like,
Right.
so I think that's on a bigger deal. That's preferably what it would look like, because I know the odds are that someone's gonna give me 1 or 2% down on a big deal is pretty rare, and
Yeah.
so the reality is I'll probably have to have one or maybe two capital partners,
Yeah.
and I can operate it kind of like you did on the 28 unit deal.
Let me tell you that I had so much interest. I had no like my investor pipeline or whatever. It really wasn't there. I got really good help from Gabe. He has
Yeah.
this, and you can pitch your deals on a Zoom call with a bunch of investors in there. And
Okay.
dude, I needed to raise like 300, right? I pitched it on there. I had like 1.3 wanted to be in, and
Wow.
this was on like a 50-50, so it's still good. It's like
Yeah.
better than 80-20, right? um and now though have people that want to do it again, and I can still push this like 50-50, and people want to put money, like they want deals like that. Like that's not like investors, like if you could, especially if you're good at finding deals and you find a way like that's how I'm thinking I'm gonna go up, is doing like that. I like, yeah, exactly, one or two people, hope maybe just like one guy, hopefully, like ideally it's one guy with all the money right there, boom, and then he's like almost like a silent partner. He has some, if he's structuring JV, he has some say, but other than that, it's like I'm operating the deal, and it's one partner, and it keeps it simple.
Yeah.
Mm.
I like to keep it as simple as possible, and so that's what I would do, and that's what I'm working on, and so hey, one maybe two partners take down a bigger deal, and also I think it is a little bit easier on the bigger deals because, as I said, you can hire somebody for an in-house, office person, a maintenance person. So that's what intrigues me is, hey, you actually have to scale to almost make it a little bit easier, if you're in this 20 to 50 unit range right now, which you and I are both in.
Are you so you're in Texas, right? You're looking at deals in Texas. I have traditionally, like, all my deals, like right now I'm in my 8 unit. Like I literally live here, and then right
Yeah.
across the street is 28. And so I've been operating in one county, and now I'm still only been really looking at, when I do look in this county, in Polk County. And so I'm thinking of like, okay, maybe I might have to open it up. Like, what do you think there? Like, as far as like, how do are your deals like similar, like location wise, or like what do you see there? It's like, how far do you plan on looking?
Yeah, so I've got several properties in the Bryan College Station, Texas market, which is where Texas A&M University is. That's where I started. That's where my first duplex is,
Mhm.
and I have a lot of flips there, and so that's where I got started in real estate. So I bought there, and it's a fantastic market. I'm still buying there currently, and then I moved to Fort Worth, Texas, which is where I live now, and that's where the 29 unit
Okay.
portfolio is. So I have properties in about three different counties. Now, I will say they're all within driving distance, which is nice. Like Bryan College Station is about 2.5 hours from me in Fort Worth.
Yep.
So I go up there probably once a month, maybe. I have a team down there who helps me out as well, so it's pretty streamlined. And then the 29 unit portfolio, the farthest property is about a 45-minute drive.
Mhm.
So it's not, I do like being able to drive to the properties within a reasonable amount of time. And
Right.
so that's in Dallas Fort Worth is so big that there's,
Yeah.
you can, there's so many different counties within 45 minutes to an hour drive. So that's helped me kind of expand my search a little bit.
Are you familiar with like Caleb Hommel and like Christian, Osgood and those guys?
Yeah, yeah,
I
yeah, I
know
know.
they own in Dallas,
Yeah,
like they're in Texas or something like that.
yeah,
Those,
they own in Stephenville, I
yeah,
believe.
Stephenville, yep, yep, yep. Those guys that's how I found out about seller finance in 2022. I don't know, Cody Davis.
Yeah.
Cody Davis, yeah, that's how I found out about seller financing. Those guys are awesome.
Oh, okay, cool, awesome.
You have so you have a flipping business too, like you flipping. I flip too. Like I actually, so I started out as a wholesaler, and
Okay, yeah,
actually working for. I saw a post on your Instagram of like you were with Jamil or something like that, right?
yeah, yeah, yeah.
I was the acquisitions rep for his company, Keegley. Like that's how I.
No way.
Yeah, yeah,
That's
yeah.
crazy.
In
Yeah, Jamil's
2020.
a guy. That's funny.
And I was a wholesaler in 2020. Then I left 2021, started my own wholesaling company. And then I realized like the flippers are making more than me or whatever. And then I flipped a house and whatever, and that went well. Then I bought the duplex. Then so that's awesome. So tell me about the flipping business and like how what's that been like for you?
Yeah, I enjoy that. My goal, Lucas, is I'm 22, so I don't, the rental portfolio is what I call kind of the long-term wealth bucket. So for me, my goal is to not take any profit
Hmm.
from my long-term rentals. The goal is, hey, reinvest everything back into it or use that money to go buy more rental properties. And then what I can live off of is what I make on my fix and flips. And then I still do a couple wholesale deals a year as well. So those two, I kind of have, you and I both know rental properties are not passive, but it's a little bit more passive than fix and flip. So I've got kind of my passive bucket, which is my rental portfolio, and then I've got my active bucket, which is my wholesale and fix and flipping. So that's the goal. Some of these smaller, like I primarily flip duplexes, and
Hmm.
it's done really well on the flip side of things. And so those those make a decent profit. And it's like if I can make a profit on those and then put it into, a smaller apartment building or something like a 29 unit, oh, I think it's huge.
Right. Okay. Yeah. That makes a lot of sense.
And
Okay.
it's good to have that active income,
Right.
even
That that
though even though it's kind of taxes ordinary income, still you got to make a living. And I'd encourage you, if, it's going to be hard to really grow your portfolio if you're living on that cash flow every month. If you can have another income business and live off that business and then put all that into
right.
your property business, I think that's the cheat code for success.
Yeah. That's what I've been kind of figuring out too. Like, okay, because I'm not flipping or anything right now, and I'm thinking like, okay, so I might have to do something too. Like, I don't know. Like, I feel like it just makes sense to do it. Like, I don't know why not. A lot of people have multiple like types of things going on, but I don't want to lose focus too. Like, focus to me,
Yeah.
I think it's like you gotta have crazy focus to pull any of this stuff off. It's
Oh,
like,
I agree. Yeah, and to me, I'm cold calling all the time, and so it was, hey, I'm finding these opportunities. Sure, they don't work necessarily on numbers wise for a long term rental, but I could totally flip it, and these flips are relatively simple.
yeah.
And I have private lenders who I use, so I'm not putting any of my own money into them.
Mhm.
So, and I mean, as I said, I have a team down there, so it's not hands off for me, but it's not a ton of work And so it's kind of nice to just keep that thing going. And then, as I said, you put that all back into the rental property business. Obviously you've got to live a little bit, but whatever's left over, you can put back into the rentals.
Yeah. Dude, that's awesome, man. I really like, seeing you like killing it, man. It's awesome. It's awesome to see.
It's so much fun, man. It's so much fun. Anybody in their 20s needs to buy some properties. It's so much fun.
For sure. Well, dude, let them know where they could find you. If they want to find you online, like how do they get a hold of you or anything like that?
Yeah, the best place you can go to my website, which is connorkinney.com, ConnerKinney.com, or on my Instagram, which is at Connor Kinney.
At Connor Kinney. Make sure you follow him. Dude, that's awesome.